Hello everyone and welcome to my channel. I'm Alex Morgan and today we're taking a close, real-time look at the silver market in the United States. This is your live market update for February 9th, 2026. Not hype, not noise, but a clear breakdown of what's actually happening in silver right now, what forces are driving today's price action, and where this metal may be headed next. Today is February 9th, 2026, and if you're watching the silver market right now, one thing is absolutely clear. Silver is not giving easy answers. The U.S. silver market today is a perfect reflection of uncertainty, tension, and competing forces pulling the price in different directions at the same time. As we speak, silver prices in the U.S. futures market are trading in a volatile range, reacting sharply to movements in the U.S. dollar, expectations around Federal Reserve policy, equity market weakness, and shifting investor psychology. This is not a calm market, and it's not a market driven by just one headline. It's a market being shaped by layers of pressure that are building on top of each other. In today's session, silver has been moving with noticeably higher intraday swings compared to what we usually see during stable periods. This tells us something important right away. Traders are not confident enough to commit fully to long positions, but at the same time, sellers are also hesitant to push aggressively lower. That tug of war is visible in the way silver prices spike on news and then quickly pull back, only to find buyers again near short-term support zones. This kind of price behavior is typical when the market is waiting for confirmation, not just reacting to the past. One of the most important drivers today is the US dollar. Over the last several sessions, the dollar has shown signs of strength as investors reassess interest rate expectations in the United States. Even small changes in expectations about when and how aggressively the Federal Reserve might adjust rates can have an outsized impact on silver. When the dollar firms up, silver often struggles because it becomes more expensive for non-US buyers, and that reduces immediate demand. Today's price action reflects exactly that dynamic. Every time the dollar ticks higher, silver hesitates. Every time the dollar softens even slightly, silver tries to recover. Another critical factor influencing silver today is what's happening in US equity markets. Stocks have been under pressure, particularly in technology and growth sectors, and that has created mixed signals for silver. On one hand, equity weakness can push investors towards safe haven assets like precious metals. On the other hand, when market stress increases too quickly, investors sometimes sell silver to raise cash or reduce overall exposure. That's why silver behaves differently from gold in moments like this. Gold tends to move more cleanly as a safe haven, while silver, because of its industrial role, reacts in a more complicated way. Industrial demand is always in the background, even if it doesn't dominate intraday trading. Silver remains a critical material for electronics, renewable energy technologies like solar panels, medical equipment, and advanced manufacturing. These long-term demand factors haven't disappeared, and they help explain why silver often finds buyers on dips rather than collapsing outright. Even on days when the market mood turns cautious, there is an underlying belief among many participants that silver is fundamentally undervalued relative to its future industrial importance. That belief doesn't guarantee higher prices tomorrow, but it does influence how deep pullbacks can go. Retail investor behavior is another piece of today's puzzle. Recent data from market trackers and fund flows shows that retail participation in silver remains elevated compared to historical averages. Even after sharp corrections in previous weeks, many smaller investors continue to view silver as a long-term opportunity rather than a short-term trade. This creates a situation where dips attract buying interest faster than expected. However, retail enthusiasm can also increase volatility because sentiment can shift quickly when prices move against expectations. Technically speaking, today's silver market is sitting at an interesting crossroads. Momentum indicators are no longer showing extreme overbought conditions, but they're also not signaling a clear breakdown. This neutral to mixed technical picture explains why price action feels choppy. Short-term traders are reacting to levels rather than trends, while longer-term participants are waiting for a decisive move. When markets behave like this, it often means that a bigger directional move is being prepared, but the timing remains uncertain. So what could happen next from here? Let's talk through the realistic scenarios without hype. In a bullish scenario, silver would need a combination of factors working together. A softer US dollar, renewed expectations of easier monetary policy, or a deeper sell-off in equities that drives safe haven demand could all act as catalysts. If that happens, silver could attempt to reclaim recent resistance levels and build momentum toward higher price zones that traders have been watching closely. The key word here is confirmation. Bulls need follow-through, not just one strong session. In a bearish scenario, silver could come under pressure if the dollar strengthens further and economic data surprises to the upside, reducing the urgency for rate cuts. In that environment, silver might test lower support levels as speculative positions unwind, but based on current market structure, sharp collapses seem less likely unless there is a major macro shock. Instead, downside moves would probably be gradual, marked by volatility rather than panic. There's also a third scenario that many traders underestimate: consolidation. Silver could simply move sideways for a while, frustrating both bulls and bears. This often happens when markets are digesting big moves from earlier periods. Consolidation doesn't mean nothing is happening. It means energy is being stored. Historically, long periods of sideways action in silver have often preceded strong directional breakouts, but predicting the exact timing is extremely difficult. One thing that's important to understand about today's silver market is that it's no longer driven purely by inflation narratives or crisis headlines. It's being influenced by a complex mix of financial, industrial, and psychological factors. That complexity makes silver exciting, but it also makes it dangerous for traders who rely on simple explanations. The market today is rewarding patience and risk management more than bold predictions. If you're an investor rather than a short-term trader, today's environment might actually be constructive. Volatility allows disciplined investors to build positions over time rather than chasing prices. If you're a trader, today's silver market demands respect. Tight stops, clear plans, and an awareness of macro news are essential because sentiment can flip quickly. As we move forward from today, keep an eye on a few key signals. Watch how silver reacts to moves in the US dollar rather than just the dollar itself. Watch whether sell-offs are met with strong buying or weak follow-through. And pay attention to how silver behaves relative to gold. When silver starts to outperform gold consistently, it often signals growing risk appetite and stronger momentum. To sum it all up, today's silver market in the US is volatile, uncertain, and full of tension. But that's exactly what makes it important to watch. The metal is being pulled between macro pressure and long-term optimism, between fear and opportunity. The next major move hasn't fully revealed itself yet, but the groundwork is being laid right now. Whether silver moves higher, lower, or sideways in the near term, one thing is clear: this is not a market to ignore. If you stay patient, informed, and flexible, silver will eventually show its hand. And when it does, the move could be powerful.